Thank you so much for joining us on this cold and rainy morning. It is such a pleasure for me to introduce to you Amy Nauiokas, the founder and CEO of Anthemis, which is an early-stage fintech investor, although Amy's going to tell you a bit more about how she defines fintech and what she invests in. I've known Amy for a couple of years. She and her co-founder, Sean Park, started Anthemis about almost 10 years ago now. And before that, she had a long career at Barclays, and she also has a sideline in producing films. And the last time we spoke, you were on your way to the Oscars.
That's right.
So just to start off, tell us a bit more about Anthemis and how you see it fitting into the fintech ecosystem.
Yeah, so Sean and I started Anthemis about just over 10 years ago, and it was after about a 10-year career of trying to convince those inside the large financial institutions that the world was changing. And our mission was quite straightforward. We wanted to reinvent financial services sort of from the inside out, and created more than just an investment platform, but created an entire ecosystem of regulators, financial services institutions, investors, entrepreneurs, academics, to really try to solve this problem, which has become known and defined as fintech, but we really saw it as a much larger opportunity to reinvent the layer of our industry that we believe fundamentally drives the entire economy, right? So if you look at financial services, we sort of look at it in three parts. It's the transaction layer, really, and where you see a lot of payments businesses and the consumer interface businesses, the finance layer for the lending side, and then the risk management layer. And if we can get, if we sort of appreciate that that is the underpinning of the entire economy, and that if it's healthy, robust, and resiliently built for the digital age, then virtually any business model that looks to innovate in any industry that relies on any one of those three areas is within scope for us as a fintech investment. And so we've seen a lot of opportunity emerge for us, and I think for others, that doesn't traditionally look like financial services.
Although at the same time, you have a lot of investments in many of the what we traditionally think of as the big fintech sectors, payments, wealth management, insurtech and insurance, retail and consumer banking. You have about 500 million of assets under administration, and your last fund closed last year at about 106 million.
Yep.
Right. So how do you think about those different sectors? Like, is there anything in particular that you're particularly excited about today?
Yeah, I mean, we're spending a lot less time at the user interface level, the consumer-facing businesses that are straightforward about just a better way to transact. I think the market opportunity for that has significantly passed. And we do still look a lot at lending businesses, but more specifically in areas of the underbanked, and particularly issues in sort of education, financing, or in SME, where we fundamentally think that the big banks and financial institutions haven't quite gotten it right yet, and we think there's lots of opportunity there. But the lion's share of the investments we've made in the last couple of years, we've made about 40 transactions, and the majority of them have been in what would be considered insurtech. And there's a whole host of reasons why most of the folks here probably appreciate that the insurance space continues to be a very green field. This is not an industry that was particularly innovative for very long, and so as such, there's not a huge legacy of having to redo or commit to technology. It's really about an opportunity to figure out how do we fund this risk management layer and benefit of certainly for the insurance companies, but for consumers. And that's where I think it's about, when we call it looking at that risk management layer as part of the embedded finance proposition. So for example, we'll look at trends that are happening in the market. Years ago, we identified very early some of the trends in mobility, and so we were able to identify an insurance platform called Trove that was specifically dealing with just-in-time insurance for the shared economy and for kind of the new world of being able to insure things only when you need them, or only when you're using them, or when a different person is using them. And those industries really sort of drive a lot of the investments. And some of the other spaces in insurtech that have been very interesting to us, we've been looking very closely at the clean tech space, which is how we sort of uncovered opportunities in things like KWH Analytics, which is essentially a derivatives and insurance platform for the solar financing industry. We were able to find an opportunity in a company called Flow, which on the tin is a hardware software piece of piping that goes into your house's main water supply and helps manage leak detection and water conservation. But leaks and water damage because of leaks is the #1 insurance payout in the home insurance space worldwide. And so we find that if we make an investment as a fintech investor, we can help bring the company and its business into the business-to-business market and introduce it to insurances. And lots of other spaces, agriculture, we sort of underwriting things for drone insurance to manage flocks of animals, and a company called Stable that has a business around managing weather risk, for example.
I'm curious, can we just get a quick show of hands? How many of you in the room are entrepreneurs or have, investors and work at a bank or another big company?
Oh.
Okay. So I'd be curious, that's interesting, it's more investors than entrepreneurs. For both the entrepreneurs in the room, but other investors, how useful do you find the fintech frame these days, given that for you, fintech can be...
Yeah, I think for us, generally, one of the things about fintech that's always defined it slightly differently than a lot of other sectorial investment strategies is that it is a complicated, sort of market structure-driven, highly regulated community. And for a young entrepreneur or someone who sort of is trying to innovate from the outside in, it still requires a significant amount of connectivity to the industry. We've never thought this was going to be sort of a revolution of sorts, that one day all the banks would implode and all the startups would take over, but that we needed to evolve together. And we're seeing certainly in the last few years that that's happening more and more, that fintechs and financial institutions are working closely together. So we've found ourselves in a very unique position to be able to bridge the two, and I think it's highly valuable to our portfolio companies, even from a business development perspective, right? So even knowing who to talk to at some of these large organizations from a business growth perspective can be highly daunting, and can take so many more months to engage than if you've got an investor on your balance sheet, that is on your cap table, that is allowed to kind of open doors for you and sort of direct you in the right way.
To that point, one of your big exits was Simple, sold to BBVA. How do you think about exit strategy for your portfolio companies these days?
Yeah, it's interesting. The industry has changed so robustly in the last few years, and I'm still not. I fundamentally believe that there are certain financial institutions and incumbents that should be looking to acquire startups, but I do think that there is a fundamental cultural disconnect between large financial institutions and the entrepreneurial know-how that some of these startups are coming to attack. And I think you have to be really careful from an acquisition perspective that you're taking these things that sort of disappear very quickly inside of a large organization, and that part of their value was that they were simply a solution that could move more nimbly and interact and connect a little bit more aggressively. I do think, though, that when we think about exits and partnerships with the industry, we sort of are starting to think about, certain places are category leaders, like in the robo-advising space, right? Betterment has sort of locked it up, in our view, and we are an investor in Betterment, so but it doesn't mean necessarily that they have all the answers, but they've like a lot of the earlier fintechs, figured out that the customer relationship and how you communicate and interact with that customer is so much more important than sometimes the products you're selling. And I think that a lot of the financial institutions have been very slow to figure that out and to get that. And so places where some answers can come from the fintech community and we can look to attach partners that complement one another, I think there's still huge opportunity there. I think fintechs are lasting a lot longer on their own, and there's so much money in the industry that the sort of requirement to go public for exit capital and these are huge markets, right? And in some cases, certainly in the B2B space, if you can nail a couple really great customers pretty early, you don't necessarily need to bring your company public because you've got this fantastic model that starts churning off cash in a way that can pay back your investors and continue on. So I think we're going to continue to see less exuberance around IPOs, more evolution in some of the products and services, particularly some of the secondary market products that and secondary trading that we might sort of be inclined to see as time goes on.
I'm curious about your sort of global perspective. Anthemis has headquarters in London, and we've seen from CB Insights and others that while fintech deals are up, or were up in 2018, they're down in Europe and up in Asia and South America as well as here. What's kind of your global perspective, and how are your European?
Yeah, we have. Our portfolio is about 50% North American, 50% European, and we used to say that and you probably could still say that if you started a company in Norway and just slowly brought it west, by the time it got to the valley, it would certainly, you wouldn't do anything else to the company, and the valuation would increase exponentially. But what's been happening in Europe, and we've always found it to be a really interesting, specific sectorial focused area of sort of hotbed entrepreneurial know-how. Kind of some of the earliest blockchain stuff coming out of Germany, for example, or some of the sort of the AI opportunities kind of being homegrown in Scandinavia. But what I've been noticing most recently since the sort of Brexit or non-Brexit of it all is that you're starting to see a lot of these communities outside of the UK really start to take on a life of their own. And we're seeing huge opportunity from both entrepreneurs and development generally in places like Porto and continue in Berlin and Paris. And I think that's going to continue. Brexit was sort of the impetus to sort of say what we need to figure out locally. We don't have to go to London to become an entrepreneur. We don't have to go to London to find venture financing. And so you're seeing a lot of people recognizing that there's opportunities to invest in some of those communities from the West as well.
Are you doing anything in particular to prepare for whatever happens with Brexit?
Well, I think if we did, we'd be changing our strategy every couple of weeks. So at this point, we're sort of just letting things play out and continue to just do our work and meet great people.
Anthemis was in the headlines about a year ago because your CEO left after a female employee complained of a sexual harassment complaint. Can you tell us a bit about how you handled that and how the firm has moved on?
Yeah, it's really been an interesting year of introspection. And one of the things that we've always prided ourselves on as Anthemis is that we started about 10 years ago, which is about when a lot of the bigger fintech companies were starting. And so we've grown alongside of a lot of companies as a startup. And so, there have been moments in our history where we feel like we've got a really great sense of being able to really share the same journey that a lot of our portfolio companies are going on, and we're no more removed or better than anybody else in terms of sort of stuff that kind of comes at you that you didn't see coming. But one of the messages we've always talked about from the beginning at Anthemis, and it was one of the reasons why I personally wanted to start this company, was how important having a very strong and critical mission and a very, very strong set of values were to the company. And I think people get caught up, and certainly we did at some point, talking about a strong culture. But if you go out of your way, as we did, to hire for diversity, you shouldn't actually have a very strong culture. You should have a very segmented culture that is unique and diverse and inclusive and sort of finds itself defining itself in various different ways. But you absolutely, in order to build resiliency into your company and into your value proposition, have a very strong set of values. And the only thing you can do is, continue. If you've got those values, you have to have sort of a no questions asked adherence to them. You have to trust that they're going to work, that they were why you had them to begin with, and then you just kind of cross your fingers and hope that when you have big things happen or things you didn't expect or things that in a million years you wouldn't have imagined happen, that you can kind of bounce back from them. And I would say a year later, I feel pretty confidently saying that I'm really proud that how the team has handled themselves, but also how cohesively our values have kept us together as a team and made us better than ever.
You and I have spent a lot of time talking about diversity and inclusion, both at Anthemis and within your portfolio companies. I believe your team of employees is more than half female?
We are. We're 53% female right now, and that's across the entire firm. 40+% of our investment team is female, and 65% of the decision makers in the firm are women.
And yet, about a year ago, you polled your ecosystem, and I think only about 38% of startups said that they were investing in diversity and inclusion. How are you addressing that and making the argument for diversity and inclusion?
Yeah, you know, it is such, I'm very optimistic that we are starting to see change, and I can feel it for us internally, because and I think the first time we chatted about this, you very clearly asked, like, how many of your portfolio companies have women at the helm of it, right? And at the time, it was probably like 5 or 6%. And we knew that in order to make it happen, this is a group of people in a company that was actually focused on this almost on a regular basis, and it was still incredibly hard to get it right. And so over time, we've been able to make some changes for us, to the point where now we have 15% of our companies are co-founded or founded by women, and over a third of them have a founder who would identify as part of an underrepresented or a minority community. But that was not without a huge amount of effort. And I think that we have to, as an industry, continue to focus on it, and we have to continue to talk about it, and we need to push ourselves on it, because it is abhorrent that only 2% of the funding globally is going to female founders. And more importantly, which I have to say, to CB Insight's credit, the VC groups today, I think there's 4 panels and 3 of them are with women. But I read a stat recently that really freaked me out, that 75% of venture capital firms do not have female investors. That is unacceptable, and I think we have to all challenge ourselves to figure out, how do we make an impact, and what works for one company might not work for another. But it's really hard to make major change around diversity, inclusive, and belonging if you don't think about it right from the beginning. And we talk all the time with our founders, if I were going in to advise a large financial institution that had hundreds of thousands of employees around the world, about how they could become more diverse in their community, it's going to be hard. These are companies that were set up hundreds of years ago for men, by men, and innovating or trying to, it becomes very difficult, and trying to kind of change that sort of oil tanker and and making them move and be more nimble. But when you're starting a company and you have 1 or 2 or 3 or 4 employees, shame on all of us if we can't have the conversation early on and make a difference. And it goes in ebbs and flows, and we've had lots of conversations with co-founders who are very committed to it at the beginning, but then you get caught up in building your business, you have to start fundraising, and it becomes less. And our job as investors, and I would encourage all investors out there, is that don't let it go too far, right? So they might need 6 months of not focusing on it, but then they have to get back to it. And if they close their A round, they've got a little bit of time, they've got a little bit of space, have the conversation. And we found our founders to be incredibly open to the conversation and not ignorant about the problems, right? They just don't know what to do. And so we spent a lot of time with our portfolio success team at Anthemis working with founders to try to make sure they understand which networks they can pull from and how they can diversify their own community, because it works. I mean, this is not just diversity for diversity's sake. It is good business. I am convinced that the reason why we have such strong returns and that our portfolio and our thesis is so incredibly different than any other investor in the early stage that's out there, and why portfolio companies find us and seek us out, is because we're seeing things that nobody else is seeing, because we have a different network of people looking. We're hunting in different places, we're talking to different people, and that makes a huge difference.
Well, that's a great note to end on. Amy, thank you so much. Thank you so much for listening. And the next moderator is going to be Greg Schoenberg of TechCrunch. Please join me in giving Amy a warm round of applause.
Thank you. Thank you so much, Maria.